But this is something which, for me personally, could point towards the fact, well, probably we are not in a bear market yet. And there's another thing. Everyone is looking at the 21-week EMA, right? Like everyone and the mother is looking at that because whenever Bitcoin is bouncing from it, means we are still in a bull market. Whenever we are closing below, so far this was a signal that this is the start of the bear market.
BitSwap is the hottest new way to trade tokens. Crawling all the top decentralized exchanges, BitSwap will get you the very best price and value for your trades. BitSwap is changing the game. Try it now at bitswapdex.com. Welcome to BitBoy Crypto, the largest crypto channel in all the interwebs. My name is Ben. Every day on this channel, I show you how to make money in crypto. If you like money in crypto, make sure to hit that subscribe button. Guys, today I brought it back on Chris from Crypto, who's got some very interesting things to say about his perspective on the current Bitcoin market. Are we in a bear market? Are we in a bull market? The truth is, we're seeing many conflicting ideas that seem to indicate both right now. So let's see if we can dice it up and figure out exactly which way the market's going. Now, if you want to take advantage of any of the directions the markets can go, you guys can always long or short Bitcoin, Ethereum, XRP, EOS, and many other coins on Bybit. You guys can visit bitboycrypto.com/Bybit, scroll to the top deal section, click the link, and sign up. If you need a VPN, that link is available there as well. All right, guys, let's go ahead and jump into this video and see what Chris has to say about Bitcoin. Hey, everybody, welcome to the show. Today, I'm joined once again by my friend Chris from Crypto. You guys make sure to go subscribe to his channel. It's down below in the video description. He's currently coming to us on location from a beautiful island, as you guys can see, while I'm in an office. I mean, Chris, what gives with this?
Oh man, I'm so sorry. But yeah, I just needed some time to relax. I needed a little bit of nature after being in Dubai for so long. All this green makes me happy. And I'm not only talking about the nature. I need some green candles, but I think this is something we are going to talk about today. Yeah,
absolutely. So I thought today that what would be really cool is if we just kind of give our opinions on where this market is, because right now, Bitcoin is trading sideways. It's been in a range between about 36 and 41 for a while now, for several days, and it bounces off 36. It gets rejected off 41. It's been hovering around 37.5, 38.5 recently. And the question is, like, is this thing going to plunge, or are we going to go back into a bull market? So I guess, we're going to look at some charts that you've got. But first, I just want your overall perspective before we look at the charts. Like, what are you feeling about this market right now?
Wow. I mean, it's been crazy. I think we can all agree on that. And I did not predict that we are going to close below the 21-week EMA, for sure not, right? I mean, not only because I'm a moon boy, no, because I'm taking just historical data into consideration, and Bitcoin is too early to be topping out. We didn't have the blow off top. We were bullishly consolidating among and high. And well, even though I expected that we are going to see a sharp rejection anytime soon, I didn't expect it to be that crazy. However, one thing actually I shared it as one possible horror scenario, my worst case scenario for Bitcoin. And this was this Wyckoff distribution pattern. And this, shockingly enough, played out exactly as I was laying it out earlier. It went down to 30,000 US dollars. Now the question is, how can we evaluate all of that? We closed below the 21-week EMA. We had the Pi cycle top indicator flashing, also a bull market end signal, and a few different things. I was talking about a long 11 years resistance, which Bitcoin always, when it touches it, goes into a bear market. All of these things are now checkmarked. So from a charting perspective, I would have to say, as a cold trader, we are in a bear market right now. The bear market is confirmed because the strongest bear market signals are right now checkmarked. However, not only from my own heart, but also from a fundamental point of view, the bull market is not over. I have a few arguments to show you why the bull market is not over. I really want to go into that as well. Because this is what it's all about. We need to see the full picture and then actually draw our conclusions from that.
Yeah, I think it's really important because, I'm kind of in a very similar position, which is I've been relying on the history. I've been relying on the history of Bitcoin, the history of the crypto cycles. And so far, that has not led my channel astray. But over the last few weeks, we've got something that was pretty uncharacteristic that we weren't expecting. And if this were the end of the bull market and we were in a bear market, while the charts could point towards that, the fact is the fundamentals in the history does not point to that. The on-chain metrics does not point to that. And so we have to kind of have like a moment where we try to clear out like our personal bias to whether we're, just naturally bearish or naturally bullish. You and I were both naturally bullish, and people know that, but it's because from the bottom of our heart, like you said, we really believe in this technology. We really believe in Bitcoin. We believe in the value. We believe the value should be much higher than it is right now, but we still have to be careful. We can't just go all in on everything right now because the price dropped, because a lot of times you can end up catching a falling knife. So what from the charting perspective, or, some of the different things you've been looking at, what are you seeing and showing for Bitcoin?
Exactly. So let me quickly share my screen, but I truly completely agree with you. We should try to, as much as possible, eliminate our biases. So let me quickly start sharing my screen here. I know your followers are pretty familiar with that as well, since you are talking about that as well. Glassnode is tracking data from the Bitcoin blockchain. And I wanted to start with a number of entities with a balance of more than 1,000 Bitcoin. One entity can be many addresses which belong to the same entity. And the balance of 1K means just this entity holds more than 1,000 Bitcoin. So here, this chart is actually answering us the question, how many entities are holding more than 1,000 Bitcoin? So how many whales are in the market? And if I'm zooming out here a little bit cautiously, then you can see that ever since 2009, this has been just not doing nothing but increasing. The first time, in fact, we got this dip was, and this is interesting, guys, listen to this, because there's a lot of manipulation narrative in the market. Usually I'm against that. Whenever the price goes down, it's manipulation. But there is some indications here that maybe there is some whale manipulation going on, because in 2013 we had, just before the bull market high, you can see it on the top here, the orange line going down before the price went down. So this is already indicative for the whales dumping on us. The same thing happened in 2017. They were front running it a little bit more even, and you can see actually in the middle of 17 approximately, the whales started continuously dump into the market, and then the bull market topped out. But now it's much more interesting. Now it's actually much more intense, because what we can see is approximately when Bitcoin hit here on the top right side, 55,000 US dollars, the whales started dumping into the market. Without this dumping pressure, I am very certain Bitcoin would have surpassed 100,000 already easily. You can see Bitcoin was bullishly consolidating among a very specific level. And here the orange line going down significantly points towards the fact that probably over the matter of 2 months or so, whales were continuously dumping on the market. Without these whales dumping on the market, most likely, we probably would have seen Bitcoin already smashing through 100,000. Interestingly enough, after that dump, whales stopped selling Bitcoin. I don't know how it continues, but so far it seems like that the whales stopped dumping here. You can see that the last dump was actually happening right there before the Bitcoin price went down. You can see here whales whale addresses going lower, and then the Bitcoin price dumping afterwards. So far, it looks like whales stopped dumping. This is, of course, not a 100% certainty for the future, but let's put that aside. So this, first of all, shows us maybe the whales are to blame, maybe not. Elon Musk is to blame, right? Because Elon Musk started with his news way afterwards. So this is the next one, just very quickly. The net unrealized profit and loss. I know your followers know that very well. You talk about that a lot. And this just shows us that every single time the profitability of Bitcoin holders goes into this, in every single bull market, 2 times into the euphoric area. So whenever the line here, the colored line turns blue, this is when almost everyone is profitable. So this right here in February 2011 means, well, almost everyone profitable, Bitcoin has to dump. And you can see on the downside, Bitcoin dump. Then we had a second dip inside. Almost everyone was profitable, Bitcoin dump. So the same thing was in 2013. We had a double dip inside. Everyone profitable, sell indication, Bitcoin went into this prolonged bear cycle here, and then Bitcoin had one last pump towards the upside, and you can see in November the 30th, almost everyone was profitable again, and we started the bear market. So then in 2017, we had the sign again, Bitcoin was going inside, and actually here it was also blue. It really depends on the resolution. Here I have a 7-day average, but Bitcoin went down, and then we had a second dip into the euphoric area, and Bitcoin eventually went into the bear market. So now, if I'm zooming in here, and let me actually go over to the 0-day, because then you can see, if I'm zooming in it now a little bit, this is interesting. Look at this. Can you see this, Bitcoin?
Yeah.
Like there's a little bit of blue. In this moment, Bitcoin was actually topping out again, and just from an historic perspective, we could actually expect a double dip inside if Bitcoin is somewhat similar to what we have seen in 2013 and also in 2017. But this is not everything. The most interesting thing for me here is the Bitcoin hash ribbon. And let me just explain it very quickly. It's very easy to understand. It tracks actually how much hashing power is in the market. And whenever miners are capitulating and pulling hashing power out of the market, this usually means, well, soon we are getting a buy signal. And the buy signal is whenever this red area stops. So what we concentrate on now, just for a minute, is whenever we have this red indication here, this red vertical indication, whenever it stops, this is when the buy signal is flashing. And I can tell you something, guys, it is flashing. It was just flashing this week. You can see in 2012 right here, let me quickly go there with the cursor. You can see it right here. Every single time we are ending the red area, getting the buy signal, we never see these prices again. You see it, another buy indication here, right here, but the price afterwards just goes up. In a bear market, we are not getting those. In fact, we are getting those in the end of a bear market and in a bull market. Right there, 28th of January, we never saw these prices again. Here it flashed at the approximately same price again. Bitcoin went up. So if you just bought every single time the buy signal was flashing, every single time this red vertical area was ending, which means the miners are recovering, you made bank. You made absolutely bank. In 2019, the same thing. Buy signal, you made bank. Then here, buy signal, this is the only exception because of the C-dump. It was exogenous factor. But if you bought every single one afterwards, 23rd of April, you made bank. Like Bitcoin never hit these price targets again. Yeah. And right now you can see with the recent dump here, we had the miners capitulation before because of this power outage in this Chinese province, right? Right now, the red area is stopping. The miners are actually recovering. So what we have from a historical perspective on the hash ribbons, we have 11 signals from which 10 were perfect signals and 11 of them were still making you profitable if you just held for 6 months. But actually 10 out of 11, if you just bought it immediately, you were never unprofitable on a weekly time frame. And this is something powerful to consider here. Yeah. Of course, this specific signal could be a little bit different because also the power outage was an exogenous risk where like these Chinese miners were shutting down their equipment. But this is something which for me personally could point towards the fact, well, probably we are not in a bear market yet. And there's another thing. Everyone is looking at the 21-week EMA, right? Like everyone and the mother is looking at that because whenever Bitcoin is bouncing from it, means we are still in a bull market. Whenever we are closing below, so far this was a signal that this is the start of the bear market. There is one single exception though, and this was in 2013. I think you and me, we have the same opinion that this cycle is much more like in 2013, where we are having two massive run-ups, right? Yes. I called the first one the institutional run-up, and then the last one the retail run-up for this cycle. So I think the institutional run-up, it's over. This is done. If we are in the narrative of the bull market, it's over. Like the institutional run-up is over. They were loading up their bags probably in that dump, if we are riding that narrative. But with that narrative, I think the retail run-up is still yet to come. And one argument for that, just from a charting perspective, could be that in 2013, we closed 1 week below the 21-week EMA, actually. Oh, wow. 1 week we closed below. We even had a 75% retracement back then. But because it was such a short and sharp retracement, we are not considering that as a bear market. But in fact, Bitcoin went down 75%, which means we would still have a little bit more downside, potentially. But Bitcoin went down 75%, closed below the 21-week EMA, and still went up towards the upside, and went from, I think, like, I don't know, $40 to $1,300 or so in 2013. So from a charting perspective, we are more in a bear market, but from a fundamental perspective, taking also the Bitcoin blockchain, the fundamentals, the number of addresses, the hash ribbons, the net unrealized profit and loss into consideration, I'm personally still on the bull market side. So how I'm handling that, trading-wise, I'm stepping back. I'm trading much more cautiously, much more seldom, but with my holding portfolio, I'm not moving any of my Bitcoin.
Right. Yeah, I mean, that's very similar to what we're doing. We're being cautious with trading. We haven't been trading a whole lot, but if we're seeing some buy signals flashing, you know, it could be a good time to consider doing that, but you got to be careful, use proper risk management and things like that. So I thought one thing that was really interesting when I was looking at the new poll in the 7-day chart you were showing before that, and also the whale addresses. If you really look at where those whale addresses started selling, I think that was probably about right at the top of that new pool. And so it almost seems like maybe they were dumping it intentionally to maybe keep the market healthy from getting to that spot, so we could have the second run up. And about the 21-day EMA, my comment on that would be is that everybody knows who's in this and has been for a while that when it goes under that, that's very bearish. And so it makes sense for people that are trying to manipulate the market and get people to sell to push it down that far so that people really are concerned and they're not panic selling. They're saying, must be a bear market. We're under this number. So I think the next week or two is going to be very interesting. I mean, we have the end of the futures close tomorrow for the end of May, and we'll just have to see what June brings.
Yeah, exactly. I personally think I was looking at many more metrics. I just didn't want to make it too complicated.
Yeah.
The market is technically already cleared out. I was checking the short-term holders' profitability, the realized profitability. It was going down to not unprecedented levels, but to levels we had in the C dump, like in the pandemic dump, in the Black Thursday, to levels we had at the bear market bottom, to levels we had in 2014 at the bear market bottom. It went down to these levels for short-term holders. Long-term holders, you cannot shake them out anyways. Right. So short-term holders, it went sharply down. And this is yet another argument that, well, the market is designed to take the most amount of money from the most amount of people most of the time. And that this is actually exactly what happened within the last 7 days.
Yeah, I totally agree. And I think the next couple of weeks are going to bear out what's going to happen, no pun intended. But I know I'm certainly hoping for the return of green candles and to continue this second leg of this bull run. So, Chris, thank you so much for joining us today. Everybody, make sure to go down to his channel in the video description. Make sure to hit subscribe. Drop some comments on what you think we should be talking about and where you think Bitcoin is going. Do us a favor, smash that like while we're at it. Let's try to get this video up to 20,000 likes. Chris, thanks for joining us. Everybody else, that's all we got. Be blessed. Good boy out.